Okay, guys, so here we are, 8th of April, Monday. Let's see what the week ahead has maybe in store for us on the gold chart. So last week, relatively choppy. As we were in the daily zone, as you can see, we came in, we picked up some liquidity here and there, lots of spiky behavior. I did have the short trade on when we broke out of the structural H4 piece right there, the piece of support which I brought across. My stop was above the last swing high, and I did mention on the last video, the Friday, a few days back, that in the scenario of your trade not going to target or being in a little bit of a loss on the Friday evening, which we were, it's always a good idea to just close the trade and then come back level-headed and fresh on the Monday, even if it's sometimes a small loss. It's better than holding over the weekend, not being able to switch your mind off fully from the market, and then you getting stopped out. Let's say, in this case, if we left it open, we would have lost 100 pips. I took the trade out at minus 40, minus 45. But imagine if the market opens on the Sunday evening, and throughout the Sunday, Monday, more or less early hours Monday morning, you get stopped out, you wake up, and you're kind of in a bad mood for the week ahead. So that was just a quick scenario and so on. That an example of what I would do and what I did do, just for you guys and your own, more or less advice from me. So on the daily, again with gold, I've been recording all day today. Sorry, right. Daily gold, as you can see, we have boom, bodies, consolidation mess, spike to the low, spike back in, but the body of the candlestick closed above the box. Box drawn from the highs down to the low of the candle there. Let me just modify that. As you can see, we closed back above. Liquidity taken. We've spiked back up now. So this is what is going on time and time again. Market has to find liquid points for profit taking and then moving in the opposite direction. On the 4-hourly, let me just finish off with the mention that there can be a 1242 drop and target projection. Over on gold, I took the wicks from the high there, brought it across where we've seen the breakthrough, retest into that region. We can start to roll over to the downside. Another thing we can stick on is that right there. Nice little descending trend line. So gold can pop up a little bit more before maybe creating a new lower swing high and then coming back down and into the lows. From here onward, a Fibonacci could take place from the high A into B, the low, and look where we line up. We line up more or less perfectly with the trend line. We can come into 1307 and all the way maybe to 1315. Anywhere here we are building confluence, so we can look into coming into that region and then rebounding to the downside. We have target 1 here, and then obviously we have the daily target. So we've just formulated a smaller Fibonacci within the overall daily Fibonacci on gold, because again, I did mention this in the Fibonacci section, that on a daily time frame, the market can create waves, smaller waves, and it may take some time to actually get there overall. But here we're trying to build now the confluence that the market can go from here down into the lows, and this is a perfect point for a new lower swing high to be formed. Because the week was relatively dead, even with the news and stuff, we did have the non-farm payroll, but we didn't have the liquidity to push through that directly. So what's happened now is the market found its feet off the back end of some news. It's come back up, and then what we're looking for now is a rebound from this region to take out the lows. Alternatively, if we do get a daily close above that 78.6 and the day breaks out of the trend line, we could be in for a reversal. So for now, I'll keep that in mind. I am looking for a rollover on gold. The daily moving averages are up, and so are the 4-hour at the minute, but the overall bias for this is to make a new lower swing high just below this one. Boom, maybe rebound off the trend line and come into new lows at 1260. So let's see what the week ahead has in store for us. Again, keeping the chart nice and clean there. Let's see if gold can give us that third tap, build that confluence, and go a lot lower. Onto the gold market. Today is April the 10th, and it is currently 8 p.m. Wednesday. As you can see here, after the row of daily, last week was a very, very dead week for gold, as it was more or less taking profits from the move from 1322 into 1324 down into the previous liquidity spot, which I highlighted and brought across. You can see the final candle, we actually closed above and out of the region after spiking through. Previous day spike through and beyond. The overall Fibonacci on the daily from 1347 down to 1282 fulfilled C point. And we do have the target one projection at 1264. Going into intraday timeframes, starting with the 4 hourly, as you can see from the Monday's video, just 2 days ago, we looked at further price projection and potential dragging us back into the init C wave from the intraday fib A, B, C. We're now in the perfect region to sell. I do expect maybe another spike up into the region. Last case scenario for shorts would be 1316, and then I'm looking for a new wave, a new leg short into 1270, and then we have 3 points of confluence, 1264, 1260, and also 1266. So for me, gold, I'm looking to short this, and now I'm going to take my first initial position as the market pushed us into that region. We have the 4 hour time frame, but we can also add on there as confluence. We can put the 4 hourly trend line on, and then we can also go into the hourly just to wait for execution. Point one would be, let's say we have another drive into this region. Last case scenario would be the 78.6 Fibonacci. 78.6 Fibonacci region. Secondary, we can add one position now as we bounced off the 61.8, and then as the market starts to tumble, we can check the, if I just adjust this trend line ever so slightly, we can check the placement. Okay, when I say placement, the closure. Okay, see what closure we get on the hourly below the trend line, and then we can match it up with the 4 hour time frame. Ideally though, what we want to actually wait for here is, see this point? The last lower swing high in the miniature uptrend on the day. We can wait for price to roll through, break, and break again. This is the last point because we can maybe rebound from this and go higher, because even though we are in this intraday small case uptrend, the market can consolidate before making its overall move. So first entry has just gone on right now as we were forced into the 1310 region. What we can also take from this is the psychological level at 1310 is another confluence to obviously take note of. Going from there, what we're now looking to do is sit on our hands. If you are more conservative, for me, I like to get in at the price highs, especially if it drives into a psychological level, which is right there, 1310. I will then wait for the market to roll over. Market rolls over, maybe retest the back end of the trend line, and for me it has to break out of this region for me to then maybe add and scale into another position and add one position onto my short. Targets swing, we are going to be looking at maybe hesitance in this region right here. If we do get hesitance, then we can look at maybe taking partial profits out. Maybe we'll get a rebound before going lower. Once this region breaks, and again we'll be tracking our position on the daily time frame and the 4 hour time frame, we're looking at 1270 into 1264. So we are looking at, there's wave 1, wave 2, can we get a wave 3? To fulfill the 2 Fibonacci target projections and also the lower end region right there. Now, this entire structure, for me, looking at the weekly time frame, let's just recap on the weekly for a second. Looking at the weekly time frame, we can clearly see that last week we had a nice pin bar into the zone. Again, if you look at the price action, the body closed back above the region, back above the zone. Whoops, zoomed in a little bit too much there. And now what we can see and put together is that we've just tapped into the zone. So what I'm looking for, it would be a big surprise to me if the market comes all the way back through, manage to close through that zone and leave a wick behind. We can maybe pull back in and the market can find more or less a stance of consolidation. With the daily being relatively strong right now, moving averages are suggesting that potential crossover. Well, the crossover has already happened right now. But for me, Boom. In between the zone, this is a spot for shorts. Can we roll over now on gold? Looking for maybe a rapid pull down because we can come into this region and then start to consolidate above, giving us another similar weekly closure to more or less as we had before. So I'll keep you updated on this one. I have entered a position now as we've rallied into that point. I'm taking my bias primarily, I would say 10-15% on the day, but what I'm looking for is the 4 hourly to bring this trade into an entire short swing strategy to take out point 1, point 2, and then a lot lower as well. So I'm going to see how this one plays out, and yeah, Friday it's going to be interesting to see how this actually performed, because again, due to the weekly candle, it's something that I don't have extreme full confidence on. That's why I've entered one lot here. I mean, one trade here, not one lot, but I will be scaling in. And again, I can take you into more specifics of actually adding positions and scaling in on these currency pairs. Thank you. Hey guys, so on to gold, another success, really, really good. Did exactly what we said. So over here on the Astro Flip chart, as you can see, this area, this consolidation zone, it was topped out, 4 hour spike, boom. There's the body candle closing below. Over here, obviously, was above. Market pulls back into the fib and then accelerates. So over here, let's go to the normal time frame, the 4 hourly. That was the daily that I just covered right there. But what did I say? I said that we had the overall fib, okay, and we had the other fib from A into B. I said the C retracement could well be hit. This on the daily, look at the day. Look at the daily time frame. Boom, stepped above. 1, 2, 3 drives into the 61.8. Couldn't close above, closed more or less on or below. Next day, market pulls all the way down, and then the next day spiked near to the MAs, but now we're just riding the border. Riding the board. Look at the week. Right, this kind of week is exactly what I mentioned on the Wednesday. Exactly what I mentioned on the Wednesday. So spiked into the fib, we have A, B, C, D, which needs to still be accomplished, 1262. And what I'm looking for now is obviously we have A, B, C, D there at 1269. So we have daily fib and then a 4 hourly fib. So what I'm now going to do, guys, is I'm going to remove this 1269. Good measure. And then, nice. Okay, cool. What I'm going to do, I'm going to replace this as well with the parallel channel. High the wick, down, and I'll line up to where that body is. So I'm all focusing on point 1 there, down to the C. So it's from the wick down to the body. It takes a little bit of playing around, but we have 1, 2, and then 3 came right into that zone. And then bang. So we have confluence upon confluence upon confluence here. All we now need to really do is take out this region. I'm just thinking maybe I can spruce this up a little bit, because looking at this area now and then bringing it across, because that's the most responsive zone right there. Okay, that makes a better measure, even just there, to be honest. So what I should have really done there is gone from the wick and like 1 or 2 of the bodies and brought that to right there. So the body of the candle, it's a bit silly, I haven't got my mouse with me. The the 2 bodies, okay, down to the lowest wick. Okay, so it takes the 2 bodies in the formula, as here. It's got body next to each other, take it to the wick. And what we can see now is obviously all of these. My bad. I don't know why I didn't do that before, really sorry. But yeah, just to tune that up. It's tuning day today. Just to tune that up, we have 1, 2, down to the lows. And then we have 1, 2 tests, 3 tests, 4 tests. So we're now looking to come right back into that zone. And then break into this region, because lower end region, as you can see, we clearly have that going on right there. All right, makes sense. So gold, did exactly what we said it would do. The entry, I took the entry, I posted that on my Instagram. I got quite a few pips from that. So we're looking at, from the other video, I said first entry would be up on the thrust, when it thrusts into the 61.8. Entry was there. I think it was more or less around here somewhere, 1308, I believe. Market pulls in, pulls down, breaks that structural level right there as well, which is the breaks that structural level. I'll turn this black with the all black theme. Breaks that structural level, and off we go. Off we go. Take that away now. But yeah, as you can see, just introducing, because I wanted to introduce concepts to you slowly as we go through these videos as well, because I know the first bunch of videos can be a bit of an overload, and I just wanted you guys to more or less get some concepts first and foremost, because I believe when you're teaching, it's good not to overload everybody with everything at once. Just drop it in slowly so people can pick things up at their own pace, and again, take what they need and discard the rest with it. So that's that. Really happy about that progress, and we also had the thrust into the parallel channel. I'm going to be using this more than trend lines now, guys. Really handy. And now, yeah, breaking through this boundary, going into the next one, and then we'll go from there. So goal for me is still a short. Let's see what happens next week. I'll catch up on Monday evening after some good price action, and yeah, we'll go from there.